This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled lower on Friday but notched their fourth straight weekly gain, as the latest U.S. sanctions on Russian energy trade added to worries about oil supply disruptions. Brent crude futures dipped 50 cents, or 0.6%, at $80.79 per barrel, but gained 1.3% this week. U.S. West Texas Intermediate crude futures lost 80 cents, or 1%, at $77.88 a barrel, having climbed 1.7% for the week. Sanctions on Russia are causing tightness of supply in Europe, India and China, said Phil Flynn, senior analyst with Price Futures Group. The Biden administration unveiled broader sanctions last week targeting Russian oil producers and tankers.
OPEC's share in India's crude oil imports edged up in 2024, rising for the first time in 9 years, while top supplier Russia's share remained steady, data obtained from trade sources showed. Russia's share in the world's third biggest oil importer and consumer is expected to drop in 2025 after Washington last Friday announced sweeping sanctions targeting Russian producers and tankers, disrupting supply from the world's number 2 producer to India and China and tightening ship availability. The share of OPEC in India's 2024 crude imports rose to nearly 51.5%, up from 49.6% in 2023, while Russia's share in 2024 remained at about 36%, the data showed.
Moving on to the top news in the energy sector.
China's oil refinery throughput in 2024 fell for the first time in more than 2 decades barring the pandemic-hit year of 2022, government data showed on Friday, as plants tempered operations in response to stagnant fuel demand and depressed margins. The world's second-largest refining industry after that of the U.S. processed 1.6% less crude oil last year at 708.43 million metric tons, the National Bureau of Statistics said. The figure amounts to about 14.13 million barrels per day, Reuters calculations showed, slipping from the record 14.7 million barrels of oil per day set in 2023.
Global diesel prices and refining margins spiked following the latest round of U.S. sanctions on Russia's oil trade on expectations the measures would tighten supplies, according to analysts and LSEG data. The United States imposed its toughest sanctions on Russian producers and tankers yet on January 10 to curb the world's number 2 oil exporter's revenue for its war in Ukraine. Many of the newly targeted vessels, part of what is called a shadow fleet that seeks to circumvent Western restrictions, have been used to ship oil to India and China. Refiners in those countries have benefited from cheap Russian imports that were banned in Europe following Moscow's invasion of Ukraine. Next, we have the top news in metal market. Gold stocks in COMEX-approved warehouses have jumped by 1/3 in the past 6 weeks as market players sought deliveries to hedge against the possibility of import tariffs from incoming U.S. President Donald Trump. With Trump's inauguration due on Monday, COMEX activity widened the spread between New York and London gold prices and caused sharp volatility in the part of the market known as the exchange of futures for physical, used as a hedge to general precious business activity. Trump has not mentioned precious metals in any form with his U.S. import tariff threats, but persisting uncertainty was enough to drive CME gold stocks to 23.62 million ounces, the highest since November 2022.
Aluminium prices rose on Friday to their highest level in 8 weeks as strong economic data from top metals consumer China attracted momentum following funds and set aside uncertainty over potential U.S. trade tariffs. 3-month aluminium on the London Metal Exchange was up 1.9% at $2,684 per metric ton by 17:17 GMT after hitting $2,692, its highest since November 20. China's economy grew 5% last year, matching the government's target, but growth was unbalanced, led by industry and exports. The 2025 outlook for China remains uncertain with potential tariffs from the new administration in the U.S. after President-elect Donald Trump takes office on Monday.
We will now look at the top news in the agricultural sector.
Chinese soybean processors have turned to competitively priced Brazilian cargoes instead of U.S. oilseeds, amid fears Washington will impose import tariffs after President-elect Donald Trump takes office on January 20. Worries about revived trade tensions during Trump's second administration have already disrupted trade flows to China, the world's biggest agricultural goods importer, prompting buyers to stockpile inventories and seek alternative suppliers. Chinese processors have secured nearly all of their cargoes from Brazil for first quarter shipment, according to 3 trade sources.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.